Hello, I'm Lelda Smits for the Finance News Network, and joining me from Ausbil is Director Equities John Grace. John, welcome back.
Good to be here.
John, you're the manager of the Ausbil Active Extension Fund. Can you start by introducing the fund?
Sure, the Active Extension Fund is in fact a long-short fund, or typically called a 130-30 fund. So what it really does is accentuate the Ausbil Active Equity Fund and add to the positions on the long side, funded by some short positions.
And could you outline what is the fund's objective?
The fund's objective is to outperform the underlying benchmark, which is the S&P ASX 200. And you do that by a greater exposure on the long side, funded by some short positions, i.e. the 130-30 composition. And the objective is to outperform on a long-term basis with a slightly higher risk profile.
So for people not familiar with long-short funds, what are the benefits?
Yeah, the underlying benefits are really you're accentuating the manager's underlying stock picking skills because you're putting more of the cash raised from the short positions into the manager's best ideas. And with that benefit, you're also getting some additional franking credits. So you're getting better exposure to the long ideas of the underlying manager.
And what are the risks of a long-short fund?
The risks in shorting stocks is that there's potential corporate action. So you short a stock, i.e. sell a stock that you don't own, and you've had to borrow that stock. But there's a potential corporate action, i.e. takeover on that stock, which means there's upside and you have to buy that stock back at a higher price later, meaning loss for the fund. So in Ausbil we have some stop-loss strategies within our portfolio construction to mitigate that risk.
So John, how has the Ausbil Active Extension Fund performed over the past year?
Yeah, the fund's had a good year. The market's been up about 13% for the year to the end of March 2014. And the portfolio has in fact doubled that performance in the market.
Congratulations. So what are some of the fund's biggest positions on the long side?
The two biggest positions are Macquarie Bank and BlueScope Steel. Macquarie Bank we really like for its leverage to improving financial conditions and the M&A cycle. And for BlueScope Steel, it's for the improving construction cycle on a global scale, particularly in Asia and Australia.
And on the short side, could you list a couple of stocks you're short and why?
We're short a couple of consumer staple stocks, specifically Coca-Cola and Metcash. The reason is that we are very bullish on the upside of the domestic economy, i.e. cyclical stocks, and we're using consumer staples, i.e. defensives, as short positions, of which Coca-Cola and Metcash are those.
So what were some of the fund's biggest contributors to your recent performance?
On the long side, positions in Fairfax and Lendlease have performed particularly well for the fund. Fairfax is a strong cost-out story and management is executing well on that strategy. And for Lendlease, it's a global construction and infrastructure play, and both of those cycles are improving.
Now moving to the market, John, we've seen the banks report some record first half results. What's your assessment?
Yeah, the bank results have been very, very solid. We can see upside from here as the economy improves, which means banks will continue to write loans both at a consumer and business level, which will then drive continued earnings growth. And therefore there is upside potential in this banking sector.
And finally, John, the Australian equity market remains close to record highs. How much room do you think there is to extend gains from here?
Further gains from here really rely on an improving economy, both domestically and globally. And companies will respond to that with improving earnings in that growth profile. So there is upside to the market, but we really need earnings to deliver from here.
John Grace, thank you for the update and the introduction to the Ausbil Active Extension Fund.
Thanks for your questions, Lelda.